Why is my pre-approval lower? I hate my lender. They just told me my pre-approval is lower, my job's better, my credit's higher, but now I qualify for less. I hate them. Okay, I've actually had people call me saying that, not about me, because we're very on top of our buyers, being like, guys, but there's a sentiment right now of what happened, right? And I think what lenders forget a lot is that most people aren't tied into the mortgage market like we are. You know, I hope you guys have better lives than watching the market every day binge eating, okay? I really pray for you, you do. If you don't, you're a lender. But yeah, you know, rates have risen dramatically. And if you're like, well, how dramatically? Since January, we're overall, you know, there's a lot of volatility, but I would say at least 2.25% higher. Yeah. In most loan categories. So there's definitely been maybe 2.5 higher. I mean, it's higher, guys. It's almost like I was talking to someone about it and I was like, if I look at the lowest of where I was versus where I am now, it's doubled. And it's been a very short period of time that this increase has happened. And it's left a lot of consumers pretty much just shocked and struck, which you would expect. You know, I've been doing this for 15 years. I didn't expect it to go up this quick. That doesn't mean I'm a lot of people might be like, well, you're not an economic, genius, so of course you didn't know. I would argue that most people in the industry didn't think it was going to move this fast because this isn't a super sustainable pace, right? If the Fed keeps on raising rates, if they continue to stop buying mortgage-backed securities, all that's going to happen is at some point we will stall, okay? There's a lack of inventory though, so it's like, it's just a little bit of a mess right now. Okay, but let's talk about you and the fact that you're worried about your pre-approval being lower now. Now, that's something that actually concerns me a lot. So what I've started doing with my clients is a couple different things. And if you're a lender, I would suggest you utilize this with your clients. And if you're a buyer, I would talk to your lender about this stuff. And if they don't really, agree with it, or if they can't do it, well, I'm licensed in 48 states. I've got a big team of wonderful people who actually care about their clients. So, okay. That was mean, but they do. They really care. Like they all really care. You'll see that in our reviews. Okay, so what am I doing? Oh, so many things. Okay, number one, when we're fully underwriting buyers, we are doing it at a higher interest rate. The reason why I'm qualifying at a higher rate is because I do not want to max qualify you at a rate that won't exist tomorrow. Okay, we are also not max qualifying. We are not. So a lot of times people will come to us and they'll go, well, what's the max I can afford? That is always the wrong question. It's the question that will lead you guys to being house poor. And in a market like this, it will lead you into a position where you get your dream house in contract and you find out you don't qualify anymore. So we are not max qualifying because we need some space for rates to continue to go up, because unfortunately, that's the direction it is. Like, we're not seeing any indication that rates are going to go down. The only way that would happen is if they started buying a ton of mortgage-backed securities and they said they were going to stop raising rates and they might bring them down. That's the only way. But considering right now they're saying they're probably going to raise them another 0.75 at the next meeting, not looking good. Okay, so I don't max qualify, because what I qualify you for today will not be good tomorrow if you're max qualified. I don't qualify what the market rate is at the time I get the application. I go probably about 0.5% higher if I can for the qualifying and underwriting, so that there's wiggle room, okay? Because people aren't necessarily finding houses in 2 days. It could take 30, 60, 90, 120 days to find a house. So I'm trying to make sure you're looking in a price point where if stuff goes higher, you can still get a house, okay? The other thing I'm doing, and I did a video about this a couple weeks ago, is I'm doing lock and roll. And this is something I talk to every single client about when we get to the full. So my process is you fill out an application, we get all your documents, you go to processing, you go to underwriting. We do a full underwriting. I've got videos on that too. And then you talk to me for like an hour. And during that hour, we talk about lock and roll. And what lock and roll is it's the ability for me to lock your rate for up to 90 days while you shop. Okay, now for it to work, you have to find a house within 60 days. Now, can I do this on jumbo loans? No, I can't. Can I do it on VA? Yes, I can. Can I do it on conventional? Yes, I can. Can I do it on FHA? Sure, happy to, okay? So there's a whole host of loan programs I can do this on, and where I've been utilizing it the most is if I have a buyer with a higher debt to income, meaning that they are getting near that max, but that's what they have to have in order to find a house. That is a prime candidate for a lock and roll, because then at least I can protect them so they can try to find a house within that 90-day window and close it. So that's really, you know, also some people like to sleep at night. You know, so we've seen, I've had some clients that love it, and I have some clients that are like, no, I'm gonna gamble, which I get. Like, you've gotta do what you're comfortable with, but that's one way we're definitely being proactive in this market. So the key thing here, guys, is if your pre-approval letter was decreased, it's because your debt to income's too high. Okay, and with rates going up, it's pushed you over what is acceptable. If your lender's not telling you why because they can't take the time, you're welcome. This is why. The other reason you may see a pre-approval letter decrease is because I am starting to see some guideline changes and also some narrowing in the jumbo market. So a couple months ago, I was really excited because the jumbo market was finally starting to loosen up a little bit. Yeah, not looking great, guys, not looking great. So anything that was more exotic, I'm starting to see kind of ease off. And also I do think we'll start to see those lower down payment jumbos. If the market continues, you know, towards a recession, which a lot of people are saying, those products will disappear. You know, there's no jumbo lenders that want to do a 5% down if they're fearing recession. We're already starting to see guideline changes to RSU income. So if you guys get RSU income, make sure you're talking with a lender that understands it, because that's coming into play right now too, as something that isn't going to be as favorable for you guys, and it's really frustrating. So I get that. So overall, if your pre-approval letter has been decreased, it's because of these factors. Now, if you guys have questions, comments, if you want to be fully underwritten, talk about lock and shop, lock and roll. As always, I am licensed in 48 states. I'm happy to help. I have a team of awesome people who would love to help take care of you and answer all of your questions. So thanks for watching, and